Right, another eye-catching market updates, and you'll want these. High inflation, high cost of living. You're obviously here to make your fortune in the stock market. Well, you might not be doing it on PayPal, I'm afraid. Still, whilst it's hit something of a base there, and I've drawn it with the red dotted line, I'm afraid I still do think there could be potentially more downside with that one. So I'm happy to wait. Where's the rush? AMD Micro Devices gets a lot of mentions from a lot of different places, including Goldman Sachs and other hedge funds as well. But again, you can see why I think there could still be some more downside, more likely than upside. The S&P 500 historical average valuations, are we overvalued? On one basis, we are. If we were to look at it going all the way back to the 1950s, I'm afraid it looks like we could still well be overvalued on that one. One of the things that I sort of enjoy looking at, a fair value scenario analysis and where we are with various companies. That, in fact, what you're looking at is PayPal. So even if the outlook was very pessimistic and there was very high inflation, we should be at the levels we're at now. So again, like I said, I'm willing to wait. It is something I will be buying more of sooner or later. S&P 500, where do I see this? Well, I'm afraid in the short term, I gotta wait. Why do I have to wait? Well, that's the direction of travel that seems most likely on momentum. Again, looking at valuations, the S&P 500 trailing 12-month P ratios over the last 10 years, nothing screaming value at the moment. And indeed, when I narrow that down to which stocks have been up in January, in February, and in March and in April, and have a price earnings growth ratio under 1 and a PE ratio below 25, and so on and so forth, very few companies come up. I've listed a load on my Telegram channel. Links are in the bio for that one. Again, looking at PayPal fair value, yeah, it's a fair value. I mean, can't get much cheaper, but I've still got to wait before I get in. And you can see some of the wild movements. I mean, we live in a world where Amazon dropped 16%. And even that's a blip in the sense that whilst it's a big daily drop, it's still only at levels it was just a few months ago. So it could drop further, but a good solid company and a long-term hold for me. Or take AbbVie. I look at AbbVie, stock dropped 6% after the company reported a profit, beating estimates and estimates on profits and estimates on sales. But sales were slightly below expectations by 0.1 of $1 billion. I mean, yeah, the market's just looking for an excuse to drop. And again, what I've done on the bottom chart is shown the S&P 500 and the numbers 1, 2, 3. I think 2 and 3 are more likely. 2 is more likely as a fall than 1 on that. Let me try and zoom that in for you so you can see it more closely. Obviously 2 is more likely, but 3, which would be a 50% drop since its highs, is I'd probably put a 20% probability of that. Inflation, in case any of you need to be reminded, we are at 40-year highs on that one. Looking at 10-year periods, value has generally outperformed growth every single decade since the 1940s, the exceptions being the 1930s and the 2010s. So we're back to the period of value outperformance because value tends to outperform growth generally, but also particularly in periods of high inflation. The S&P 500 had the worst performance through 82 trading days that it's had, one of the worst performances that it's had since, 1932, because it was down 13%. However, when such falls have happened in the past, funnily enough, the price return from day 83 to year end, or price return for the full year, hasn't always been obviously negative. So there's some positives over there. And the list of stocks that you can see on the screen there, let me zoom in. Actually, let me zoom into both of those. So those are those numbers. You might want to pause it. And these stocks were the companies that I found, which, as I said, had risen in January of this year, and in February, and in March, and in April, and had something about their valuations, their revenue growth, their cash flows to recommend them about them. They weren't just all negative anyway. So put those in more deeper analysis and which ones are those I actually like on my Telegram channel. Thank you all very much. The link's in the bio as ever.